Hey, what's going on, guys? Okay, so this is going to be a trade review for October 2nd. Um, this is a tough market. I've been talking about how we need the positive flows to return to the market that are going to drive price, are going to bring a little bit more volatility for us to take advantage of, and then obviously we size in a little bit more, we trade a little bit more frequently, a lot more volume in terms of our trades, and yeah. So, with that being said, a few trades that I took today on an intraday scale were everything's basically intraday scale. First of all, I want to talk about like environment and like either don't trade or trade based off of intraday time frames and intraday levels, very specific levels, range extreme highs, upper extreme highs, lower extreme lows, right? And trade those on like shorter expiration and don't overnight them by the time you get all done with it. This has been kind of just focusing on base hits as of lately, unless you're obviously in the names that are a lot more speculative, meaning just names that don't revolve around the general market. I trade the general market, so I trade tech, I trade any sort of large cap or mega cap, and the large cap and mega cap financial market as far as trading derivatives go, I mean, as an option seller, it wasn't horrible. Obviously, there was a really nice VIX pop to take advantage of in terms of being an option seller over there. But ever since then, we just really haven't had a lot of opportunity on the table. And that's kind of why you need to take the things step by step and target to target on more of a smaller time frame, okay? I feel like that's one thing that I'm messing up a little bit with Netflix is that I haven't realized enough profits for such a heavy sized trade on literally a really nice short. Okay, so I was big balls over here, right? Big balls over here, and then I got actually beneath the level, and then it reclaimed back above. Okay, that's your first initial sign, especially whenever it looks like it's getting this low volume consolidation. Breakdown failure off of this spot. That's basically where you'd want to say, okay, yeah, I should probably get out of the trade. And then I just took it higher, all the way up into these like rejection spots in these discounted hourly time frames again, from swing high, swing low. Start looking for your lower highs, right? We got relative equal highs, not technically super equal. This could be more considered a lower high on the hourly chart. But yeah, so I mean, we did get the closure that I actually preferred, which was beneath this high that was actually the initial breakout failure level. So if we could stay beneath this general range on like daily and like higher time frame prints, maybe like the hourly, I'd be totally willing to do that. And then I would start looking for downside to then obviously some sort of break, retest, and then go for the gap or go for the earnings candle high. Maybe go for these previous swing low ranges down here that built out a higher low for then the what would be then if we were down here a breakout failure spot would be all of this up here. Okay, so as far as this swing goes, I feel like I really shouldn't, as a responsible trader, I feel like it's something that you shouldn't be holding. I feel like I'm trading this one a little bit like too strictly. I feel like I could just simply have cut down here for 100%, cut over here for 100%, over 100% actually, and then just reevaluated it for lower highs, right? That used to be my style, and I've just really dialed in on big risk to reward trades. I did shave a little bit off yesterday whenever we cracked 701, but this is also a really nice area where mitigation is happening, and then the sellers who sold down here or the buyers who accumulated down here, they're going to then move up their bid a little bit on this pullback, especially whenever it's near the previous day low. And the market was gaining a little bit of strength into that closure actually yesterday, okay? So Yeah, I mean, I definitely could have been. This was sweeping into a gap, keep in mind. So whenever you go into the hourly, take off the extended hours, this is sweeping right into a gap. There's the bottom of your gap at 471.32. This is technically the fresh area of the gap. And this was a beautiful sweep and then a hold, and two consecutive trading session lows have both held this spot. Okay, so obviously this doesn't really matter too much because we are beneath the progression area, which would technically be 482.61 with a daily print closure beneath that. So it's not the biggest deal in the world that I am in shorts. We do have data tomorrow as well. I feel like this is going to continue out its distribution until we get a macro-based lower high, right? So the trend line isn't necessarily a valid measurement scale here, but I would say that this gap would be. So it would be like some sort of higher low trend bounce, maybe a liquidity trap beneath the lows. Maybe it, claims it and then we get a retest, a lower high, and then we sell even further into an aggressive markdown into Q3. Maybe we retest the liquid macro level at 448.64. I mean, there's really no saying as to what this is going to do, which is a dangerous time in the market to really be trading further out expiry, longer dated trades, especially on like your mega caps, your large caps, everything like that. So that's why I really emphasize is a lot of this stuff has to be on an intraday scale or just a 1 to 2 day type of move. Okay. So you have to find short-term momentum, hold very, very, very little importance to the day-by-day rotations. Don't try and catch something like Disney. Don't, like those type of trades don't always come to us, but when they do, obviously they're very nice. Like I hit Disney here, I hit Disney here, I hit Disney from here to here, I hit Disney everywhere, right? And that's just one of them individual tickers that make a lot of sense, and we haven't had those we haven't had a lot of those. So we have some names that are building out some bottom-based accumulations. Those being potentially INTC. So this is your earnings gap, okay? It's at the $22 spot. There's also kind of just like a resistance there throughout the whole entire range. That could be a potential trade. I'm not too sure yet. This might be more of like a weekly looking schematic. We did actually just retest a previous swing low and a support on the weekly that led to us rejecting. And then from there, this was just kind of a very clear rejection off of that point. This could be building out an accumulation. Typically what it would do is it would find either a sign of strength above this triple top, almost like a quadruple top, and then obviously we have a gap technically right here. It would find some sort of sign of strength, potentially a bleed beneath this level, and then it would trap people beneath, and then you'd find a more aggressive buyer that closes this in a hammer, and then it would typically just kind of like respect the hammerhead the next following day and then find its mark up. That's sometimes how accumulations work, or we would go for then a 3 lower low accumulation where it pops, gets a lower high, then one more lower low, maybe a 4 lower low, and then we go from there, right? We don't really know. We just have to kind of react to volume. We have to react to price. If you take a look at the hourly, this is just one of the names where, okay, you're getting a lot of news. You're getting someone that's obviously building a position. There's a lot of volume down here. Volume has stayed relatively elevated in comparison to the rest of the daily chart. We've had some of the craziest volume off of this spot, as you guys can see. Your daily average volume is much more elevated than the rest of the range. This is also just a simple break and then a failure of a previous level. Okay, so this could definitely call for then a new lower low, just because there's not enough demand. Maybe obviously there was enough supply generated off of this spot. This is a fresh bear gap as well to keep in mind. There's no flows within the market. Semiconductors aren't moving as a whole, so why would this bottom basing accumulative looking name start to kind of just be the outlier mover, right? You have to draw really logical conclusions based off the environment that we're in, okay? So it's a chart of opportunity for the future, but yet again, I've done well for a while now with a market that doesn't have a ton of opportunity. I don't think that this market is really comparable to 2021, 2020. I mean, there's been a lot of opportunity, and we caught that, right? So I don't really want to be that guy that sits there and blows profits on choppiness from beautiful opportunities like Disney, like even CVX. CVX was a really nice trade for this week. I've been basically looking for me to. I'm looking to make my week off of like 2-3 confident trades with like 3/4 size, maybe full size, 2 or 3 guys. Like, this isn't like a market where you can have a lot of. You can't be very active. So. We actually got a really nice retest for then a profit roll, which I did grab with a few cons on CVX. Not that it was anything that was like crazy, but it was just a simple retest into the closure. And it was a retest actually of the overnight gap. Okay, so this is your overnight gap. This is your 150 psych. And if you go into the smaller time frames, this would be gap. We'll make it regular level. As you guys can see, basically what happened here was, if you look on the hourly, we were getting these reversal looking candles all over the 15, all over the hourly. And this was a gap followed by a close of the gap from yesterday's close. And then also simply just an hourly higher low, as well as a retest over here. So this has been the stronger, more outlier type of basket of stocks over here. Okay, so what does that mean I'm doing? That means I am profit rolling. That means I am trading this. That means I am looking for re-entries, right, into what doesn't really work. Obviously, the target was already met, so this isn't the best of the best in terms of trades. The volatility is over in the China sector. A lot of people have been like day trading this for some unknown reason. Apparently Futu was one that was really, really nice today. What this did was like gap up and was up 14% from close yesterday to open today, 19, and then gave back every single gain into the previous day close. That's personally not part of my style. I'm more, like I said, just U.S. market. So as far as that goes, crowd is a chart that still technically interests me. So we have this gap spot here. We have a gap spot actually leading all the way down into here. I don't necessarily know if we're going to test this, and crowd has been one that I've been playing very, very, very like cautiously, because if you take a look at the weekly chart, this is still technically a very nice distributive looking chart. But whenever you get a very steep decline, guys, in weekly gaps, and you get this mass capitulation and a major overreaction on news, that's not typically going to be a bread and butter trade to then look to re-short. That's just not how financial markets work whenever you have a big area of gaps above you, okay? So this is the general zone where this is technically where the gap fill is, as far as this gap from here at 305 down into 285. And we lost a lot of momentum as we tested into this previous 2021, I believe. Yeah, swing high. And this was also a support that was established leading into the 2024 rally, whenever we had like a lot of distribution happening in Mag 7. And that led to the leader being... that was with the leaders being these names. So like CrowdStrike, Palo Alto, all those ones. And then obviously this led to new highs after it lost a little bit of steam, and then it started to distribute. Then we get that news on a random given Friday, July 19th, minus 11%. Next following day, what happens is we drop down another 13%, okay? That is going to be accumulated. I don't like, they could have done the most shittiest shit in the world. If it's a big pillar of a sector, it's very liquid. It's very, it has all of what you basically need to find an accumulation. It's going to get accumulated. If you take a look at any sort of large cap, this is why the large caps are so repetitive, and this is why they're so good to trade, is because if you know Wyckoff, if you know supply and demand imbalances, and if you know how the tape behaves and how accumulation and distribution happen and how they collect inventory and everything like that, this is just simple market behavior and how this is finding recovery, okay? So with that being said, the volume patterns are pretty nice. I mean, we got a really nice pop on September 20th with some nice volume and a really nice result, plus 8% on the underlying for the day. And this was actually two nice little breakaway gaps that obviously extended us a little bit further away from what true constructive structure really means. So this is just getting simple, mitigating looking sell volume that is finding the reversion back into the EMAs, right? And I don't really care about EMAs. It's just a gauge for how structure works. So if we can find a bid within the confines of this gap for then a higher low from maybe this low into like maybe a gap up followed by a sell, and then look and see if that sell is then repurchased for a higher low within this range. If not, I'm going to be a little bit later to the trade. And what I mean by that would just be like this gap pocket. I would like to see momentum above it for them to go target like 305. And if I do get the execution down into here, guys, I mean, this is a monsterish trade. This is like, I lost a couple times on this, but this is a monsterish trade, right? I mean, you have a risk tolerance of something very light, $5 maybe, and you're looking for like a target all the way up somewhere into this gap. Guys, we're looking at like a 7R trade, right? And with the right expiry, that could be 1,000% if you're looking at this for like, I don't know, through a minutes, through a data set. I mean, this can get moving very, very quick. And this is more of like, are we going to find a 3 higher high channel redistribution? So what I mean by that would be, okay, well, you get your markdown and then you get your channel first lower high, then you are creating like a higher low after, then you get another higher high, it's sold, and then you get another higher low, and it starts looking like some sort of like higher time frame bear flag is what a lot of people would call it. However, the range within here doesn't look like it wants to sell, but the wider perspective of this whole piece of price looks like it wants to sell, okay? But it's just simply for a third higher high that is then potentially sold, and then you get a weekly lower high. That makes a lot more sense. So, I mean, we're down here. We could be looking for this little move from here to here, right? Where we're looking for, you know, a $30 move. I mean, that's not technically what we're looking for, but you guys get what I mean. I mean, actually, we are. That's actually, it's funny I drew it like that. That's almost spot on, actually. Yeah, so can this find upside of 12%? Wait, no. Wait, what is this? What? No, I'm never mind. That was dumb. But you guys get the point. Okay, so yeah, I mean, I'm going to be interested in this chart for the future. Do I know exactly where this buyer is going to be? No. I don't want to like act like I know something I don't. as far as volume goes, this is notable, and then the no volume and the absent volume after is also very notable. So I think we get one more higher high before the redistribution happens. Personally, I'm going to be done with JPM. I think this can still be a short, to be honest. We're approaching earnings. I really don't want to be trading the earnings contracts. I really don't want to be trading. I got like a 35-40% win. And then I re-profit rolled these for just a nice little intraday trade. That's really all I've been doing, guys, is looking at like these little profits that I've been making. But maybe the chart still has opportunity or hasn't seen the fullest that I would like to see it see, so I just re-add it. That's also if that makes sense. I mean, here's a good example would be Marvel. Like Marvel is just that chart that it's hard to time, but it's good. Like you have this is actually a big gap up. If you guys didn't know, there's a lot of volume. This is an earnings candle, and this is a big gap up. This is a 12% gap up, and it's into the upper extremes of the resistance. And then the volume kind of flattened out, and we're trading like really tight spread, really tight range within the bull gap. This is a bull gap all up here. This is a bear gap, this level. Up here is technically the top of the bull gap. This is the earnings candle low. And this is also kind of like the midpoint of this whole range. So if you were to take like a little gone box, I always look at like a very cold range. Equilibrium should be holding. This is exactly why we rejected this spot today, was because equilibrium is oftentimes the area in the tape that respects this being a reaccumulation. So whenever equilibrium holds, typically what you get, it also ties in with the earnings candle low, but you basically just get like a crack in structure, and then they claim that the upper end of the like the mid-range of the extreme as progress, and then you go for the expansion or you go for a sweep, meaning like these highs, this gap. So I mean, Marvel could do something like that and then just distribute at the upper extremes of this like internal range. Or what I think is going to happen is that this thing could get a push all the way back up to these upper extremes. Right, so that being said, I mean, it would be towards the earnings candle high or just the earnings candle body territory, because that's where most of the liquidity sits within a chart like this that doesn't have enough of a auction that's sitting within all of this compression that price will facilitate towards where there's more orders, which is essentially the earnings candle. So I want to see who takes control of this. I really do. You don't need this here. You don't need any of that. You don't really need this. This is just kind of a gauge for me to, intraday wise, I don't really let it bother me. What I do is I kind of just pull it to like the previous trading session high. So when I'm looking at this, I can see where we're kind of trading at. You want to remove a lot of the noise with outside of the chart. And then our most local gap area that would likely find a higher low off of is 71.17. I have some ads on this. They're not serious. Like I said, I've said it on Twitter a lot. I've said it here. I'm not really trading much size on anything. I had a lot of size on the Netflix, like I said. I took some off down here, which is that level that needs to crack for this to be a confirmed distribution that retested and held. And this is also just a big hourly support. So we never got a crack in structure. You have to be able to think about taking profits there. I'm probably still a little too sized into Netflix, but hopefully I can manage this pretty well. Hopefully we don't get a gap off of the data. And I don't think we do, or else I wouldn't be holding it. So with that being said, INTC needs time. CRWD, this is going to be a big focus of mine. Really nice chart that's looking to play out up into, I think, 300. As far as like similar names go, Snow, I mean, we're in a very big base here. Maybe this is what we would call technically this isn't really a lower low of accumulation. But if we get a low, we sweep, then we push back, we reclaim above the range, and then we get a higher low on back into the support. That would be a really nice trade with like a aggressive spring down here. I would like to see an aggressive buyer that's stepping in on volume down here. You go over to something like, what's another one? PANW. Similar chart, guys. Channel, we did lose progression in terms of like buy side right over here. And then they sold it right off of that spot. Caught a nice little intraday trade on Monday. And now we're kind of just sitting at this swing low. So I would like to see what happens on this chart. We're probably beneath the moving averages. We are indeed. This is an inside bar. Not necessarily sure what's going to be happening here. If you take a look at the weekly, it's kind of got that pullback look on the weekly where we can find a higher time frame, swing low, swing high, equilibrium based entry. But there's no signal here for me to trade this like tomorrow. Nothing like that. As far as data goes tomorrow, we have... Does anybody have an economic calendar? I can look. I'm on it. So tomorrow's Thursday. We have initial jobless claims and PMI tomorrow, 8:30 and then 9:45. So I am going to be trading with a little bit more size tomorrow just because these are events that can increase tape size, which brings volatility, and we need volatility. So yeah, I want to see what happens off of the 8:30 print in the morning, and then I'm going to be hitting a little bit more of a scan. Then a lot of these don't necessarily look too great. Obviously, Tesla has that event on 10/10, which is in 8 days from now. That would be next week on Thursday. Okay, so I could go for an intraday trade on this tomorrow because I feel like a lot of traders are going to be trapped on that sell followed by the break and then a reclaim of the gap with a wick on the daily. This dates back, guys, actually. This is right off the OPEX bar. This also dates back to this massive gap from over here. That's not really relevant. That's just kind of where the low a day actually is sitting. We have an increase of volume. I don't know. We'll see. We'll see. I mean, this is coming right off of a swing high from 2 trading sessions ago. 1 trading session ago, actually. So it's not the best chart. 245, 246-ish is going to be my area of focus for tomorrow. I might dabble into some weeklies. I don't really do that anymore. I can, though. I'm actually pretty good with weeklies. It's just like I have not had like the mental capacity to really be dealing with it. Haven't done them in forever, other than like very light size positions and profit rules and stuff like that. I don't know. We'll see. I might do that. Apple, really nice trade today. Could look for some trade tomorrow. I would say that this is distribution. Really low volume leading into the data. Makes a lot of sense. This is why I'm not taking very serious. That's why I'm not really taking trading too serious right now. We swept the previous day low. If you go into the 5, what it did was it got the breakdown failure followed by heavy volume right off of 10 a.m. There was nothing on 10 a.m. as far as data goes, but this was just a simple breakdown failure into like an entry opportunity, risking the previous day low right here. For then a move into the opening print and then start using the opening print as like a trailing now, and then it got really nice continuation. If you're looking at this as far as an intraday trade goes, I mean, you could put your risk beneath the current low, trade the claim of the level, look at the previous trading session high or the opening print. It's like a 2-3R trade. Not a bad one. Not great, not horrible. And then other focuses that I do have. If the market wants to sell, I could get a little bit more aggressive with Netflix again. I took ads on Netflix and then sold those ads Thursday or Tuesday. Really nice trade there. And then as far as other things go, sectors wise, no sector is showing me a signal anywhere. Consumers are getting smoked. They're breaking out of this like top heavy volume. If you look at the weekly, volume anomalies were hitting on the weekly, and the trend stalled for a little bit. These aren't good looking charts right now. Energy, really explosive move. Already have talked about this. CVX was a nice win. Have some contracts and some rolls, not a full position. The full position was already on the momentum that was leading into the 150 spot, as well as up here on the runners. These are just simple rolls right off the overnight gap fill. I own a little bit of Marvel. Already talked about this one. Was looking for a buyer off of the bottom of the gap. We found the buyer on the bottom of the gap. I couldn't get the size that I wanted to get because we didn't sweep the previous low, which we actually technically did. But if you go into the 15, I mean, it's just right off the open. Nice rip. Bullish market, I'm looking at Marvel tomorrow. Microsoft looks bad. This is a really clean chart, by the way. I've been talking about this one. So with CRM, the fill is not really optimal anymore. I could scale into the momentum that we're getting over here. However, this was a really nice sign of strength opportunity today. I feel like the better entry and the better trade would have been here all the way up into here, but it was a 3-day move of not really too much. I mean, if you're taking this from here to here, that's a 4% move on the underlying. That's not even anything crazy. Got a really nice, strong, elevated volume today, though. So I'm going to throw this one on the focus for tomorrow. It's not a good entry, but it's probably going to be just a simple base hit. I'm going to throw that one on there. CRM. I'm going to remove JPM for now. And then if we go into looking at like relative strength on some of these names, that's China. Crowd, already talked about Crowd. No interest in this chart. And as far as everything else goes, I have already looked at is D-Dog Does that pair up with CRWD? Is that Cyber? It's like Cloud, I believe. Yeah, so this one I think I could take over 118. I think I'm going to take this one over 118. What's CCJ doing? Oh, wow, that went vertical. Yeah, so I'm going to add D-Dog, and that's going to be it. Small focus list, but kind of how things got to be. As far as like indexes go, data's big tomorrow. We have an inside bar beneath equilibrium of this range, so it's technically a bearish looking setup. Whenever you're looking at like, okay, we got the previous trading session high, the previous trading session low. We traded within that trading session, lower volume. We're going into data tomorrow at 8:30. We tested the golden pocket today, 618 0.50. This could be really good for the Netflix short. And I'd be looking for this to dig a little bit lower into that gap. So we'll see. We'll see. I'm going to post maybe another chart or two if they are clean. And that's going to be it. So